All right, so you want the real deal on Rivian's earnings call, huh?
Yeah.
Well, you've come to the right place because we're going deep on their Q3 performance,
Okay.
picking out those all-important numbers and going through all those critical conversations between
Yeah.
the executives and those analysts always asking those questions.
Right.
But first, let's set the stage.
Okay.
Rivian produced 13,157 vehicles and delivered 10,018 in Q3,
Okay.
bringing in $874 million in revenue.
Yay.
Sounds pretty promising, right?
Yeah.
But hold on.
Yeah.
Yeah.
Because their gross profit was negative $392 million.
Oh, wow.
To help us break down these numbers and really see what's going on behind the scenes, we have expert speaker.
Hi. Always glad to dive into the details.
So that negative gross profit is a bit of a red flag, isn't it?
Yeah.
What does that tell us about Rivian's financial health right now?
It definitely brings up some questions.
Yeah.
A negative gross profit means that they're spending more to produce each vehicle
Yeah.
than they make back in sales.
Specifically, their gross loss per vehicle delivered comes out to about $39,100.
Wow.
And that's pretty steep,
Yeah.
even when thinking about factors like depreciation and stock-based compensation.
Oh.
Now, while Rivian did mention some one-time costs
Right.
related to efficiency initiatives, the fact is that path to profitability is looking a bit rocky.
Yeah, it does. You mentioned efficiency initiatives.
Yeah.
One thing that I saw was the ramp up of their Gen 2 R1 platform.
Right.
And they seem to be betting big on this for cost reduction.
Yes, that seems to be a cornerstone of their strategy.
Right.
In the call, Rivian highlighted a planned 20% reduction in material costs from Q1 to Q4 of 2024.
Okay.
And their new tri-motor variant, which uses a single enduro motor, plays a crucial role in this.
Okay.
R.J. Scaringe, Rivian's CEO,
Right.
stated that the tri-motor offers superior performance at a lower cost relative to the quad motor.
Wow.
So they're aiming for both performance and cost effectiveness.
Sounds like a smart move, but we can't forget about those challenges they faced during the Gen 2 rollout.
Sure.
What were some of the big hurdles they mentioned on the call?
Well, there were a few, actually.
Okay.
So first, bringing in new suppliers always comes with risks.
Right.
And 50% of the bill of materials by cost comes from new suppliers for this platform.
Wow.
Second, there were those inevitable production hiccups that come with any new product launch.
Right, of course.
But the big one, and this really impacted production, was a pretty significant disruption in their supply chain.
Oh, wow.
Scaringe himself admitted that this has been a tough quarter because of these supply chain or supplier ramp challenges.
Yeah.
He even said, one of those suppliers in particular has limited our production quite substantially, and we're working very, very hard to address that.
A single supplier holding things up like that.
Right.
It sounds a bit precarious, doesn't it?
It definitely brings up concerns about their supply chain.
Yeah.
Now, Javier Varela, their COO, tried to calm the analysts by saying that this is a short-term issue, saying the last weeks have been very promising and we see that we are in the right trend to recover the right capacity. Really, really promising. So we think that problem, I really think that problem will be over in the very next weeks.
Okay.
He insists that new capacity is coming online quickly.
Right.
But it's important to note that despite all these Q3 issues, Rivian is still predicting a positive gross margin for Q4.
That's a pretty bold prediction given their current situation.
Yeah.
Did they talk about how they plan to get that turnaround?
Yeah, and that's where things get really interesting. Their plan relies a lot on upping production of their tri-motor variants for both the R1 and their commercial vans.
Okay.
The logic is that these models use a single enduro motor, which makes production simpler and hopefully cuts down on those supplier bottleneck problems. Claire McDonough, Rivian's CFO, said during the call that they expect a modest GAAP gross profit in Q4, driven partly by an estimated $300 million in regulatory credit sales.
Okay, so let's break that down. Regulatory credits. For those of us who aren't fluent in financial lingo,
Yeah.
what are those exactly?
Think of them like bonus points that car companies get for selling electric vehicles.
Okay.
These credits can then be sold to other car companies that haven't met their EV targets.
Okay.
So it's basically a government program to get more EVs on the road.
So Rivian's counting on selling these bonus points to boost their profit margins.
Yeah.
That sounds a bit risky, don't you think? What happens if, nobody wants those credits anymore?
That's a good question, and it's one that analysts jumped on right away.
Okay.
They really wanted to know how sustainable Rivian's plan for making a profit is,
Yeah.
especially since they're depending on these regulatory credits.
Okay.
Adam Jonas from Morgan Stanley, for example, asked straight up, can you remind us what percentage of your sales are leased?
Why does the percentage of leased cars matter here?
Because a high lease penetration rate can affect a company's financial stability,
Okay.
especially when the economy is not doing so great.
Yeah.
If people are watching their spending, they might not be so keen on leasing new vehicles.
Right.
And when those leased vehicles come back, they flood the used car market, which could make prices go down and affect residual values.
That makes sense. So what did Rivian have to say about their lease penetration rate?
Claire McDonough confirmed that lease penetration was 42% in Q3.
Okay.
That's a big chunk of their sales tied to leases,
Yeah.
which could leave them vulnerable to ups and downs in the economy.
Right.
Analysts naturally had more questions about this.
Okay.
Adam Jonas, for instance, went on to ask whether Rivian was taking on any direct residual value risk related to those leases.
That's a key question. Residual value is basically what a car's worth at the end of its lease ride.
Right.
If those values plummet, it could really hurt Rivian's bottom line.
Exactly. McDonough said that they share those residual values with their lease partner, Chase,
Okay.
and they use third-party assessments to figure out those values.
They also claim to be keeping a close eye on the market and adjusting their reserves as needed.
Okay, so they're not completely overlooking the risks, but still, 42% lease penetration in a potentially shaky economic climate is definitely something to watch.
Definitely.
What else were the analysts focused on?
Well, they were digging into Rivian's strategy for not just dealing with these economic headwinds,
Yeah.
but also competing in the EV market, which is
Yeah.
getting more and more crowded.
Right.
There was a lot of talk about their upcoming R2 vehicle.
Yeah.
Remember, it's set to launch in the first half of 2026 with a starting price of $45,000.
Right, the R2.
Yeah.
They're saying it's their path to mainstream success.
Yeah.
But analysts seem iffy about that $45,000 price tag.
They were, especially considering the expected range and how fast the world of affordable EVs is changing. Tom Norian from RBC Capital put it pretty bluntly when he asked RJ Scaringe, just wondering how competitive that would be, a $45,000 under 300-mile range vehicle. In 2026, the competitive environment seems to be we have GM with Equinox at sub $30,000 with 300-plus miles of range. How does that compete?
That's a hard one to dodge.
Yeah.
How did Scaringe answer that?
Well, he clarified that the $45,000 R2 will actually have a range of over 300 miles,
Okay.
but it'll be a lower performance model.
Okay.
He also stressed that the R2 will have a unique combination of features and attributes that will make it stand out in a crowded market.
So he's basically saying, trust us, it'll be worth the price.
Right.
But were the analysts buying it? Did they push for more specific examples of what makes the R2 so special?
Oh, they definitely did.
Okay.
They weren't satisfied with vague promises of being unique. They wanted to know how Rivian's going to go up against big players like GM and Ford,
Right.
who are also expanding their EV options really quickly. One analyst even brought up concerns about tariffs and how they could affect the R2's cost targets,
Yeah.
especially with all the talk about trade wars and global tension.
Right. That's a valid concern. Did Scaringe address that directly?
He did. He emphasized that they've been really strategic in how they're sourcing parts for the R2,
Okay.
specifically thinking about potential tariffs.
Okay.
He said, a lot of our focus has been on sourcing suppliers that are not going to be subject to large tariffs, and in places where we have sourced suppliers that are overseas that could be subject to changes in tariff structure, design the contracts and design the relationships in such a way that we're not carrying much of the risk.
Okay, so they're being proactive in trying to minimize those risks.
Right.
But beyond cost, what about the competition?
Yeah.
What specific features or advantages does Rivian say the R2 will have?
They highlighted a few key points.
Okay.
First, they stressed that the R2 will use the same electrical architecture and software as the Gen 2 R1. This, they claim, will make development smoother and potentially lead to big cost savings.
Right.
Second, they pointed out that they've already sourced 85% of the R2's parts, and they're confident they can meet their cost targets.
Okay.
And third, they highlighted the R2's key role in their joint venture with the Volkswagen Group,
Right.
which is expected to close this quarter.
The Volkswagen partnership is a big deal.
Yeah.
How did they talk about that on the call?
They were cautiously optimistic, emphasizing that the joint venture is going well,
Yeah.
and that they're excited about the potential to spread their tech across different brands and markets.
Mm-hmm.
Scaringe even mentioned that they have a driving demo showing their tech integrated into a Volkswagen Group product.
So it's not just talk, they're actually making progress.
Right.
But what about the specifics? Will the joint venture directly affect the R2?
That's still up in the air.
Okay.
Analysts pressed for details about which Volkswagen vehicles would use Rivian's tech
Right.
and what the timeline for integration would be. But Rivian stayed quiet, saying those decisions are ultimately up to Volkswagen.
I get wanting to keep some secrets, but that lack of transparency could also make people wonder if the joint venture is really as game-changing as Rivian says it is.
That's a fair point.
Yeah.
And it highlights something that came up a lot in the Q&A. Rivian needs to actually deliver on its promises.
Yeah.
Analysts are looking for proof that they can overcome production problems,
Right.
achieve real profitability, and launch the R2 successfully.
So it seems like Q4 is make or break time for Rivian.
Yeah,
They've set some ambitious goals,
they have.
but the pressure's on to deliver.
Exactly. And as we get to the end of this deep dive, it's worth coming back to those key questions.
Right.
Can they hit their production numbers? Will those gross margins actually turn positive?
Yeah.
And maybe most importantly, will the R2 live up to all the hype?
Those are the big questions, and only time will tell. So we've looked at the numbers and gone over the strategic plans, but there's something else about this earnings call that's worth thinking about: the tone. Sometimes it's not just what they say, but how they say it.
Yeah, you're right. What's not said can be just as important as the data.
Right.
Remember those tough questions from analysts about the supplier problems that messed up Q3 production?
Yeah.
Let's go back and listen to how RJ Scaringe, Rivian's CEO, answered those questions.
Okay.
Did he sound defensive? Like he was dodging the question?
Yeah, I'm listening. How did he come across?
He actually seemed pretty direct, admitting the problem right away.
Okay.
He said, "This is one of our highest priorities in terms of the business, and we're seeing this as really a short-term issue, but it's certainly introduced challenges as we saw in Q3. He took responsibility, but also sounded confident that this is just a temporary setback.
Okay. And did Javier Varela, the COO, say the same thing when he talked about ramping up new capacity?
Yeah, he did. And his words are worth paying attention to.
Right.
He used phrases like promising results, sense of urgency, and right trend.
Okay.
Remember that big statement he made? He actually said, "I really think that that problem will be over in the very next weeks."
Wow. He's really putting himself out there. But we all know actions speak louder than words, right?
Right.
The real test will be if they can actually reach those production goals in Q4.
Absolutely. Analysts will be watching to see if Rivian can actually do it.
Yeah.
Now, there was also a lot of skepticism about their positive gross margin prediction for Q4, especially since they're relying on those regulatory credit sales.
Right.
Did you notice how Claire McDonough, the CFO, addressed those concerns?
Yeah, she admitted that regulatory credits are just one part of the plan, right?
Right. She emphasized that they're also really focused on improving their overall cost structure.
Okay.
She specifically talked about material cost reductions and operational efficiencies on the call. Remember when Dan Levy from Barclays asked her about the cadence of those material cost benefits, how they layer in over time?
Yeah, I do. It seemed like he was trying to understand their plan for achieving those cost savings.
He was. And McDonough's answer was pretty detailed.
Okay.
She went into the specifics of their progress with the Gen 2 platform and talked about what they expect in terms of ongoing improvement.
Okay.
She didn't shy away from the tough questions and gave a roadmap for how they plan to get those cost reductions.
So she gave some reassurance.
Right.
But it's clear that getting to sustainable profitability will take a while for Rivian.
They agree. Now, switching gears to the R2 and the Volkswagen partnership, did you notice the tone when they talked about those?
Definitely. There was a real change in energy.
Right.
When RJ Scaringe talked about the R2,
Yeah.
it was like he was showing off his pet project.
He did seem really excited about it.
Yeah.
Remember how he answered those questions about the R2's price and how it'll compete in a crowded market?
Yeah.
He really believes that it'll offer a unique set of features. Right.
That will connect with people.
I remember. He sounded almost giddy, like he couldn't wait to see it on the road.
Right.
And that excitement seemed to carry over to his talk about the Volkswagen partnership.
Yeah, he talked about the potential to grow their tech and move into new markets with a lot of optimism.
Okay.
It's clear that they see this partnership as a major way to grow in the future.
So there's a lot of positive vibes around Rivian's future plans.
Yeah.
But as we talked about, it's all about making it happen.
Right.
Can they turn that vision into real results?
That's the big question.
Yeah.
This earnings call showed a company at a turning point.
Okay.
They're facing some serious problems, but they're also full of ambition and believe they can change the EV market.
This has been a really interesting deep dive, and I think we can all agree that Rivian is a company to watch.
Definitely. Their journey's not over yet, and the next few quarters will be crucial.
Right.
Will they be able to increase production and meet those big goals.
Yeah. Will those gross margins actually become positive, like they said?
Right?
And how will people react to the R2 in a market that's getting more and more competitive?
Those are the questions we'll be thinking about as we wait for the next earnings call. Thanks for taking us through this deep dive. It's been really insightful.
It's been my pleasure. Until next time, stay curious.